Hello guys, welcome to my channel. This is my first video, and in this my YouTube channel I'll be creating so many videos where I'll be analyzing the market. Each week I'll be providing three market analysis based on three pairs. So today I'll be analyzing GBPUSD, but first of all I have to say uh, my video might not be of quality. My accent might not be of quality. This is my first video. I edit the video myself. I worked on it myself, so the video is natural. There's no script writing, and so I just want to be natural. Let's be like a discussion between me and other people. So I'll be analyzing the market. So what I'm trying to analyze is GBPUSD. And going through this chart, you guys will be able to have a insight on how to trade GBPUSD in the coming weeks or in the coming months. So each time I analyze the market, I'll give an opportunity for you guys to see a trade opportunity in the near future or in the future far away. So presently, like always, the most important aspect in market analysis is market structure. Market structure is simply us looking at the market and trying to predict where the market is going to head to. That is, we look at the present action of the market based on past price action and try to predict where the market will go in the future. That is, based on past market price action, we look at the present price action and try to forecast the future of price movement. As simple as that. So starting on the higher time frame, I start on the monthly time frame. You guys, we are going to the chart together, and you guys can start watching at the charts with me. So looking at the chart at the moment, you guys will be able to understand that price has been bearish. And in trying to analyze the market, I'll be giving you guys some tips, some simple tips to be able to understand certain concepts in the market. Presently, on the monthly time frame, personally, when I analyze the market, I focus on demand and supply. My trading is based off on demand and supply. This is the most used concept which exists on earth. Demand and supply is a simple concept which helps to determine the value of price or the value of an asset. Taking an example, once there's a product in the market, if there are a lot of people trying to buy that product, the price will increase because the demand is high. But when the demand is low, it means people are not even interested in the product. The product is not actually selling. The people actually selling the product at that particular moment will need to reduce the price. They'll need to reduce the price so much so that the price will be able to low and motivate people to want to buy the product. So it's the same with currency pairs. So looking at GBPUSD now, we go into the market. We're on the monthly time frame. I don't know if people understand the concept of demand and supply, but I'll try to explain to you guys the concept of demand and supply a little bit. But in the future, I'll be creating videos about these trading concepts. Looking at the charts, let's go straight to the point and let's not waste so much time. Presently, on the monthly time frame, we can see that it's simple to understand. This look at this point here. This is the lowest point that was created within this monthly time frame. This is the lowest point that was created, this point, and this is the lowest point at a particular time, and this is the highest point at a particular time. From this chart, we can look that within these 2 points, we can see that this is the first highest point, the second highest point, the third highest point, the fourth highest point. And you guys can see that the more price is moving to the right, the more these highest points, the values are decreasing. Here the value was 1.49, 1.5. Here the value is 1.4 something. Here the value is the same, and here the value is 1.3. It means the market is bearish. It's a simple concept to understand. The market is low. this low, let's start this low, for example, is lower than this low, and this low is lower than this low. This high is lower than this high, which is lower than this high, and which is lower than this high. Just to tell us the market is creating lower lows, lower highs on the monthly time frame. Simple, it's telling us the market is bearish on the monthly time frame. It means people, those big banks and institutions which are trading based on the monthly time frame, they are looking more of sales than buy. And where do we look for sales? You cannot just sell anywhere in the market. You cannot just sell anywhere in the market. This is where the concept of demand and supply occurs. Looking at this chart, I've been able to map out certain zones. These are zones which I call demand and supply zones. And since the market has been bearish, that is, price has been moving downward. It has been moving downward. Understand? We thought it has been the main focus here is demand and supply. This is a supply zone which was created because directly after this last candlestick, we saw a huge sell-off to the downside. That is called a supply zone. Price retraced and it came back to this supply zone which was formed. And because supply zones and demand zones have a higher probability of providing a reaction on a higher and powerful time frame than on a lower time frame. Monthly time frame, weekly time frame, daily time frame, these are very powerful time frames. Price might come into a monthly demand or supply zone and still continue to move. That is true, but we have a high probability that we might see a reaction. You understand? So price came back to this supply zone, created a reaction which went down, created another structure, that is it broke this previous structure, that was this previous low that was here. It broke it to create a lower low, and it kept on this week. This week is what I call liquidity. It means liquidity has to be this is what I call liquidity. There's a concept of weak filling. It means, look at this candlestick. This candle body is smaller than this candle wick. This candle wick is far much bigger than this candle body. This is what we call liquidity. And there's a probability that once you see a candlestick where the candle body is smaller than the candle wick, there's high probability that in the future, be it in the near future or in the future far ahead, it price will come back to fill out this candle. It might fill out this candle up to 50%. That is, it might not fill the whole candle. It might come like and fill the candle up to this level. And still keep all this one. But now, price might come to fill up to this level. Around here, we might come to fill it all. So we saw this week and pushed price to the upside. As price was going back up, came again to this second supply zone which was created, and we saw a reaction. Price had to battle within this zone, but there was a multiple reaction. But at the end, price was able to succeed. It means the big banks, the institutions were able to succeed to push price below, and price was dropping. And reaching at this point, price created a pinball candle. This pinball candle is what we call an indecision candle. It means this candle here, buyers and sellers are fighting. Buyers were fighting that at this moment price should go up. Sellers were fighting that price should come down. But due to events and whatsoever, we saw a huge sellers won the market, and they were able to push price downward. And in pushing price out, they created a supply zone. Price went so much down that it was able to fill out this liquidity, fill out this week completely, and then work structure to the downside. But remember, guys, this is another hint. This is another tip. It created another week here. Looking at this candlestick, the whole candlestick, the candlestick body is smaller than this candle wick. The same concept which I said here. There's a high probability that price might come in the near future, but since we're on the monthly time frame, it cannot be in the near future. There's a high probability price will come down to fill out this week, be it filling out in 50% level or that 100% totally. And that is the first sign to show that price is bearish, because one, there's a week which has been left here on field, price has to come and fill it. The second aspect which is telling us on a monthly time frame that price is bearish is simply because price has been creating structure to the downside. Market structure has been moving to the downside. Because of these two aspects, we are focusing on sell on the monthly time frame. Understand? And price started going up. You guys can see this is a monthly time frame here. Price came out back, price reacted to the upside. This is a demand zone. Now this is another demand zone. Remember, price came here, price formed this demand zone, went up, came back to test the demand zone. As price came into this demand zone, we saw a quick reaction to the upside, which broke structure and came into this other supply zone. It means if you guys can see, price is either reacting from a demand zone or either reacting from a supply zone. Understand? If we use this simple concept, it will give us an idea. Okay, presently in the past, this is the past. Price has always been reacting from either supply zones or demand zones. And if from the past we saw there was a previous supply zone or demand zone and price is moving towards that direction, in the present we are expecting that as price is moving, in the future it should be able to reach either the supply zone or the demand zone, and we see a reaction and an opportunity to buy or sell. Guys, understand again. Understand this simple concept. I'm taking it on this pair GBPUSD. Price is always moving in so take it again. Price always move from a demand, either a demand zone or a supply zone. That is, we always see a reaction of price from either a supply zone or demand zone on higher time frames. Understand? So as price was moving presently, we're expecting price to reach this zone. This was where we're expecting price to actually reach this particular zone. And we're expecting that once it reaches here, we should also be able to see a reaction. Yeah. And in seeing a reaction like this, we're expecting that price now to be able to push price. Price here has reacted, and where are we expecting price to come? Based on our concept of demand and supply, we look for the nearest supply or the nearest demand zone. But since supply has reacted and we've seen a demand zone within the area, we're expecting price to come here. Maybe it might come down in 2 candles, in 5 candles, we don't know. But we have to be patient. Understand? For example, price reacted here. It took it started dropping from here 1, 2, 3, 4 candles to come back and react on this demand zone. Here it might take 2, it might take 3. But we have to. This is only based on the monthly time frame. Our main point of our end point of focus is for price to reach this zone. Understand? But when you go to the weekly time frame, we might also see where we are expecting price to actually reach based on the weekly time frame. Then we balance the two and we have a good market analysis. So basically on the monthly time frame, we're expecting a sell, and our sell naturally is for it to sell within around this area and to come right here. It might not just occur now. For example, this week was created in March 2020, got taken out in September 2022. That's 2 years. So it has been created here in September 2022. It might be taken out maybe in 2024, 26, 28. But also, because we are just predicting the market, we can never be actually sure 100%. Price might obviously react here and create a higher high. These are all liquidity. Market might actually react here and continue to move higher. But 95% of our probability is for price to sell from here. That 5% is for if in case price has to move up here. That is why we trade with what we call risk management. Risk management comes in when, based on our analysis, we become wrong, or based on market events than natural events that occur that affect the market. They might actually change the direction in which price might move, and if it occurs, the risk management protects our capital. That's very simple. So I scale now to the weekly time frame, and coming to the weekly time frame, we don't need to focus again on previous price action. We don't need to focus about what price did in the past, because we have already studied price in the past. Understand? Now, what do? We study what price is doing in the present and try to carry it in the future. Obviously, also on the monthly, in the future, we're expecting price to really sell downwards, but it might not just happen at once. Looking at the weekly, what is happening presently? This blue line here is the start of the year, end of year 2023, beginning of the year. Price has been creating structure. I don't want to talk about higher highs, higher lows. Look at what price has been doing here significantly. It was a weekly demand zone which was created. Price came back and mitigated here within this 1 week demand zone. Went up, started dropping down. It was unable to come right down. From here, it created we saw 2 huge weekly candles which was created. In creating these 2 weekly candles, the demand zone was created. Price came down, touched the weekly demand zone, got a reaction with 2 huge candles again, went up, started coming down, was unable to come down like this previous reaction, like was able to come down completely, created. It came also here, was unable to come down completely. It created another move to the upside, which brought in this demand zone. So what is our present bias? We have 2 probabilities here, very simple. Firstly, we're expecting everything can happen. That's the concept of trading. That's why we have to manage our risk. Price might react here, give us an opportunity and take out this high. There's a weekly supply zone here before we start dropping down. You understand? Why? Look at, if we go back to the left, this is that weekly supply zone. Within this huge demand zone, within this huge monthly demand zone, there is a weekly supply zone. So price might still decide to come and mitigate again within this supply zone. It might decide to come into this supply zone and mitigate before coming down, and it will also be within this supply zone, which is within the demand zone. Within this type of zone, a weekly and a monthly, it gives more power for itself. Or that in another case, price might just dance within this area and decide to come back within this area before it gives us that reaction we need. So these are the 2 possibilities. But if you guys look at in all our possibilities, we're expecting price to come down into that monthly demand zone which we created since this monthly demand zone. Yeah, but it might not come at once. It might play around here, see a reaction here to push to the upside to take out this high before coming down to take out to meet up this demand zone. So those are the 2 possibilities which we are seeing in the market. So presently now on GBPUSD, what I'm trying to tell you guys is there's an opportunity in the market to take a buy. You might look for an opportunity to take a buy within this weekly demand zone. This is where price is actually reacting from. And now, notice something, guys. We use the higher time frames to understand where price is and where price will be going to. But we scale down. We have to scale down to the lower time frame to actually use our trading strategy to enter the market. Let me tell you something. No matter there are a lot of trading strategies in the market. People trade with indicators, people trade with support and resistance, ICT, smart money concept, and so on. But market structure does not change no matter the type of strategy which you use. Nobody exists on earth as a retail trader. There's no retail trader who exists by executing trades on monthly and weekly time frame. You understand, guys? We all have to analyze the market on the monthly time frame, the weekly time frame, but we have to go now down. And in analyzing the market on the monthly and weekly time frame, we will analyze the market on a similar base. It's when we scale down to the lower time frame, up to the 1 minute time frame, where we understand that each and everybody has their own different strategies which they use to enter the market. Yeah, people enter the market on the 1 hour time frame, on the 4 hour time frame, on the 30-minute time frame, on the 1 minute time frame based on their own different strategies. But market structure does not change. Entry models change based on different strategies, but market structure never changes. Once you understand market structure, we go to the next step. So in this my first episode, I've just been able to analyze GBPUSD on the weekly time frame and on the daily time frame. So I'll go one time frame below today. So I've been able to analyze the price on the monthly time frame and on the weekly time frame. I'll go again below to the daily time frame. So let us have another closer view to what price is doing. And with time, guys, I'll be able to analyze the market, provide entry opportunities based on my strategy, and you guys will be able to look at them and try to see if you are able to take trades based on my opportunities. One thing I must tell you guys is trade in the way I analyze market, it requires patience, but because 20% profit a year is so much money. The problem is capital. You struggle to get. Me personally, I will not tell you guys you take $1,000 and you become rich. You take $5,000 and you become rich, or whatsoever, $100. No, guys, what I will tell you is you focus on education. You get really educated, then you get into prop firm capital trading. You succeed to acquire $1 million in prop firm capital or 500,000 in capital. FTMO, for example, you can get $400,000 in capital. And if you've educated yourself so well, making 20% of 400,000 overall per year, it's okay. You don't need to trade every day, or you don't need to trade every move. You just have to wait for price to reach a particular zone which you have been expecting. And another tip for you is if you are expecting price to reach a particular demand zone or supply zone which finds itself on a weekly or on a monthly time frame, do not even open the charts on other time frame. Your charts should remain only on the particular time frame which you are waiting your setup. You are waiting a reaction from. If price does not reach your weekly or your monthly demand or supply zones which you are waiting, do not scale down to the daily or the 4 hours or trying to look for setups. You'll get messed around. You might get mixed up, start losing trades, damaging your psychology, and so on. So personally, okay, if you're expecting price to come here, okay, presently we saw a reaction here. If you're expecting okay, let me do something like this. If we're expecting price come into this zone, okay, to this weekly zone, but what did price do? Price did not reach that weekly zone. It started dropping. As it started dropping, you're expecting to come into the weekly zone. Once it came into the weekly zone, which you're expecting it to come to this zone, that is only when you scale to the daily 4 hour, 1 hour, 30 minutes. Only when it has reached this zone, then you can start scaling in to looking for buy opportunities. Now, if price break this zone, let's say price break this zone and forms a candle below like this, the candle is around here. Let's say this is the candle. This is a candlestick. If it's here, and in your trading system, you are expecting price to at least reach within this, so at least reach here for you to trade. Keep your charts like this. Do not scale okay, we're on the weekly. You are expecting price to reach within this 1 week and this 1 month zone. Your chart here should show 1 week or that 1 month. Simple. Do not start going down to the 15 minutes like this. You start finding problem. That is problem for yourself. You understand? That is so much problem for yourself. If you start going up to down to that level, that is problem for yourself. That will be so much problem. So you stick to the zone which you are expecting a reaction from. Understand, guys? It's very simple as that. It's very simple as that. Simple as that. So that's the simple concept I have the simple tips I have for you guys. Okay, to resume the video, our bias on the monthly is bearish. Our bias on the weekly is bearish, but there's a possibility for price to react from here and go up to targeting weekly supply zone before coming down, or there's a possibility for price to show us some reaction here and continue to selling down to finally come here. But our final, no matter what of this, if one of these two happen, we are expecting that our final target is here. If price gives further reaction and we are able to, based on our strategy, we're able to say it's opportunity to take a small buy, we take a buy. But if it completely does not give us our setup and continue to move, we'll continue to be patient to wait for price to reach this 1 week and to give us the opportunity to take a sell. And if you give us that sell, we take a sell. Now targeting below here. Why targeting? We should be hoping that along the way there are liquidities which we are trying to take out. Our final target is here. If it can react and come down, we can go up and come down, but we'll look for opportunity so no matter what happens. This is our target here. Once we already know where we want price to, once we know the future endpoint of price, we should do our best to make sure we trade. While having that into mind, yes, of course, we might get a small reaction here for a setup here for a buy. If we get a setup here for a buy and we see some liquidity we want to take out, we go in for the trade, but it's a short-term trade. We don't need to hold the trade against a trend. Never trade against the trend. So that's all. That's the first tip. I've given you guys the analysis of GPU. The second tip, remember what I told you guys about week. The second thing I told you about this week, when we see a candlestick where the wick is bigger than the body, that's a possibility. That's imbalance. People talk about imbalance. That for me, that is the real imbalance, basically on GPUs, because all wicks are always failed. So there's inefficient price action here. Because as prices came, it started going back up. People didn't even have time to enter the market. Their orders were not filled. So there are a lot of people, orders here on left. So price has to come down and fill these orders. So that's the second point. And thirdly, you have to be patient enough to focus on trade only on these bigger zones. That's all for now, guys. Please try to subscribe, try to comment, try to share. In my next video, I'll be analyzing Euro USD. For the moment, I'll be focusing solely on GBPUSD and Euro USD. My analysis might be the same, but for the moment, I'll be analyzing 3 pairs, maybe GBPUSD, Euro USD, and gold. I'll be analyzing 3 pairs per week. After each week, I'll have opportunity to analyze the market again. So guys, stay tuned to my channel, comment once more, subscribe, share with friends, stay up to date. I promise you guys, if you are able to stick to my channel, your trading will become better and better in the next months to come. Thank you and stay tuned.